Think your S Corp is saving you money? You might be one expensive mistake away from an IRS nightmare. In today's episode, we'll show you how to spot the red flags and fix them before they cost you.
Your creative genius deserves the same precision behind the numbers.
Welcome to Let's Get Fiscal,
hosted by Anastasia, Maisha, and Danielle,
part of the women-led team at Coterie Tax.
From smart tax moves to cash flow strategy,
we decode everything it takes to run a thriving creative business
so you can scale with confidence and sleep easy at night.
Press play and let's grow your business.
Hi, welcome back. So today we are going to be talking about S Corps again, which is super fun, but also complicated. And so today I was wondering if you could kind of tell us a little bit more about the common problems you see when it comes to S Corps, especially like on the tax side of everything.
Yep. So I always say S corporations, they come with a lot of extra responsibilities and they are a little bit more complicated. So there's a couple different areas where they can kind of go wrong.
Yeah.
I always say that an S corporation is like a little baby. So you have to take care of it. You have to check in on it, and really kind of pay attention to what's going on in the company. So some of those items, I wanted to just kind of go over a few of the main ones. And I think the number one issue is confirming you are an S corporation.
Oh, okay. So wait, how do you confirm it? If you've done your form and you've sent it in, how do you confirm?
Right.
Yeah.
So in order to request S corporation status, you have to file the form 2553. And so normally you fax that in to the IRS. And I mean, we give everybody a fax confirmation that shows that it was accepted and a timestamp and everything. But that doesn't necessarily mean that the IRS has processed your paperwork.
Gotcha.
Because the IRS is notorious for just saying like, well, we have too much work to do, so we're just going to burn it. Like, they literally just throw paperwork into an incinerator with the idea that if it's important enough, you'll send it again.
I guess our first indication is that they're accepting faxes. So, yeah.
Right. And I mean, I have different business owners that come to me and they'll say like, oh, I thought my tax accountant sent it in, and why does the IRS not show that they have it, and blah, blah, blah. And it's like, you could have easily sent it in, but, number one, the IRS says that they should be processing it in 6 weeks. And I normally say nowadays, because the IRS is so understaffed, whenever they say weeks, change that to months.
Okay.
So it could take months for that to happen. So you think if you file a late election in September, and then you go to file your return right when e-file opens up in January, there's still a really big possibility that they just haven't even gotten to it yet.
Yep.
So there's those issues. So there's a lot of different ways where the IRS, it could have been sent, but the IRS just doesn't have a record of it for whatever reason.
Yeah.
They completely lost the paperwork, even though you have all of the confirmations, or they just haven't gotten around to it yet because they are so far backed up.
Okay. So what can you do then to like figure out if they did accept it? Yeah.
So the number one key to being an S corporation is from the moment that you submit that paperwork, you need to act as if you are an S corporation.
Okay.
So that's one of the things that the IRS is always looking at your intentions. So if you file that paperwork, you're saying, I intend to be an S corporation, so I'm going to do everything that an S corporation would do.
Okay.
If you kind of submit the paperwork, but you decide you're going to still act like a partnership or a single member LLC until they give you that confirmation, then you'll act like an S corporation. If they never send you that confirmation and they don't process it, then they might go back and say, hey, you haven't been acting as if you were an S corporation, so we're not going to backdate it to the date that you originally requested. And so what can happen is, even if, let's say, you completely forgot.
Yeah.
And you just had the piece of paper on your desk and it just never went anywhere.
Yeah.
As long as you've been acting like an S corporation, so that means, doing your reasonable compensation and all of that fun stuff, you can request a late election backwards up to 3 years.
Oh, okay. That's
so
nice.
There is like a very large time window. But the key there is you have to have been acting as if you were an S corporation that whole entire time.
Okay.
So it's really, really not uncommon for that to be an issue where, like I said, it's kind of one of those things that it doesn't really come up until sometimes the second year that you file.
Okay.
Because a lot of times the e-file system in that first year, especially when you're switching over from a single member LLC into an S corporation, the e-file system will accept the return electronically, but it'll sit kind of in the abyss in the IRS system.
Okay.
And they confirm that they received it, but they won't actually process it. And then the second year, you try to file your return, and then it'll actually reject it and say, hey, this is the wrong entity type. We're not going to accept it. So by then, a lot of time has already passed. And that's the reason why people say, like, I filed as an S corporation last year. I gave the tax accountant all my paperwork. Why are you telling me now that I'm not an S corporation? That doesn't make any sense.
Yeah.
And it's all just based on the way that the IRS system works. But like I said, there are ways to get around that. Again, it takes a lot of time to fix.
Yeah.
So it's not unusual for us to be fighting the IRS for, another 2 years to get them to accept
it. Okay.
the yes election. So, and, sometimes, again, with the IRS, you send in a piece of paperwork, they send it back, and it's all completely wrong. And so you have to ask them to redo it. And, so there are a lot of steps. So it's just making sure that you are communicating with your tax accountant. You're aware of all of the stages that it's in.
Yeah.
And that you just understand the way that the IRS is working. Because again, if something takes 6 months, it's not necessarily that the tax accountant isn't doing anything. It's just there's nothing that they can do, because I can call the IRS and I can ask them questions, and they're going to be like, well, we haven't done anything with it, so I can't tell you, I can't see anything in the system. So one of the things, especially let's say this is your second year filing and you hear this and you're like, oh my gosh, like, am I really an S corporation? How do you even figure that out before you go to file your return? And so there's 2 ways. Obviously, the easiest way is you can call the IRS and you can ask them.
Yep.
Or there is a special secret transcript called an NMOD.
Okay.
And so the NMOD is an internal document that the IRS uses to confirm the classification and a few other things of your company. So you can ask your tax accountant to request a copy of your NMOD, and then that can be sent to you. And then that would be another like official confirmation that you are an S corporation. But again, it might take 6 months to a year for them to catch up enough to be able to give you that paperwork to confirm it.
Gotcha. So, okay. Typically, though, the IRS, if they do accept it, they send you a notice to tell you it's been accepted. So you should, if you don't receive that, that should be the first like red flag, basically, in like 6 months. So just remembering 6 months after faxing to be like, hey, did we ever get that confirmation? Okay, cool.
And also looking at that confirmation letter and making sure that it has the correct date.
That is fair. Yeah.
Sometimes they'll put it, like I said, if you file it in September, even if you put the late election relief statement on there, they'll say, okay, we'll start you as an S corporation at the beginning of next year. And you're like, no. We wanted the beginning of this year, please.
Gotcha.
So, then we have to send all the information back to the processing center and things like that.
Awesome. Yeah. Okay, cool.
I know. So next one is not having any payroll.
Ooh, okay. Yeah.
Yeah.
Okay.
Yeah.
So, because you have to as an S Corp, right? Like for the
exactly.
Okay.
Exactly. So the structure of a lot of the difference between an S corporation and a single member LLC is the single member LLC is going to charge you the Social Security and Medicare on whatever your profit is.
Okay.
Whereas the S corporation, you determine what your reasonable compensation is.
Okay.
and you process that through payroll. And then anything in addition that you withdraw from the company would just be a distribution that's not subject to Social Security and Medicare. So you're kind of like, you're saving some money on that difference.
Yeah.
So if you withdraw anything from the company, that first bit has to be payroll.
Okay.
Until you reach that reasonable compensation maximum.
Okay.
So if you don't withdraw anything from the company, then you're not required to pay payroll because you haven't taken anything out. But what I see sometimes is because in a single member LLC, you are able to just take money out and it wasn't really a big deal and what have you. So what I see people doing is they'll just take the funds out of the account, but they won't process it through payroll. Or they'll say, well, I really only made a little bit of money, but it doesn't really necessarily matter if you're withdrawing money from the company. And even if you took out a loan.
Oh, okay.
And you take your money out of that loan. So the business itself has a loss. And you're like, well, I mean, the business lost money, so why am I going to run a payroll? You took money out of it. And it doesn't necessarily matter where the source is, if it's from a loan or if it's from the actual profit. If you're not taking out money that you put in, like a return of investment, then it's going to need to be processed as payroll.
Okay.
So what ends up happening, a lot of times what I see is that it'll be classified as maybe a loan to the business owner.
Okay, yeah.
But you have to be careful with that because, I mean, the IRS will see that in box 1 of your 1040, there's no W-2. And so that's what they're kind of looking for. They're like, okay, so you have a K-1 from an S corporation and there's nothing in box 1. And the K-1 tells them how much you took in distributions and they can see that there's no other employees. So because they get all of your stuff through payroll, like the 940s and the 941. So they know like, okay, this business is earning money.
Yeah.
You're withdrawing money, but you're not paying yourself.
Yeah.
So that's going to be, like kind of a quick flag for them to go after you. And what they'll do is if they notice that it was recorded as a loan to the shareholder, they'll reclassify it and they will determine what they think your reasonable compensation should be. And then they will recalculate and then charge you the Social Security and Medicare on it. But then you'll also have late fees because you didn't pay it.
Okay.
When you were supposed to. And chances are the reasonable compensation that they pin to you is going to be higher
than what you would have chosen potentially for yourself. So is there like a magic number for a reasonable compensation, like salary amount, like for it?
It's really tricky.
Okay.
Because like I said, one of the limiting factors is how much money you took out of the company.
Yeah.
So we have to do that kind of calculation there. And when we're looking at how much money you took out of the company, we also have to identify anything that you were paying out of your personal accounts on behalf of the company, because sometimes there's different things that it's, you know, you're like, I don't want to change how this is paid. So.
Yeah. It's just going to come through here.
Right. So making sure that we're recording your accountable plan, which is like one of the methods for reimbursing yourself. So getting to that true dollar amount of what you actually withdrew from the company and then using that to decide what your payroll should be. I know that there's some tax accountants that do it like an 80-20 split. 80% should be payroll and 20% should be distributions. But really it comes down to what it would be in your area and in your industry. And that's going to be very different for a lot of different people. But I normally say, I mean, right now, the IRS is going to ask, how can you survive? You know,
You're in this business.
Think, like, what is a magic number that I should be using? You know, it's going to be a little bit different depending on where you're at. But for the most part, if you're a single person trying to support an entire household, anything less than $75,000, like you're basically like going to a food bank, these days.
Yeah.
So really keep that in mind. Is the dollar amount that you're paying yourself actually a livable wage? So when people come to me and they say, oh, I have payroll of $25,000, but I pulled out $150, it's like, okay, so really you need $175,000 to survive. That's what you're telling me. So why is a $25,000 payroll? You wouldn't be able to offer that to anyone to work full-time at your company. So that's where it's automatically going to be disqualified. And I'll say, we need to increase it. And that's a big key is if you offered that to someone else to work for you, would they take it?
And could they survive off of it? Yeah.
I mean, if you can prove that they would take it,
something.
That's fine. There's people that take jobs at McDonald's and that's not a livable wage.
Yeah.
But, you have to be able to show that somebody would actually accept that dollar threshold. And so that's where we do the reasonable compensation studies and things like that, and making sure that we're actually looking at what are the things that you're doing for the company? How good are you at them? What is the average rate in your area for that? Different things like that.
That's fair.
So not paying payroll. I always say too, even if you haven't done it in the past, do it immediately. So, especially with the IRS, and I mean, with every part in life, there's no use in hiding your head in the sand. You could just come forward and say like, okay, this is what I learned from this moment forward. I'm going to do it correctly. And I'm just going to, get on board. So even if you haven't been paying yourself payroll for the last 3 or 4 years, I would say get yourself a payroll provider as soon as possible. Make sure that you're in compliance and that you're working with a tax advisor that would be able to remind you to do this. Because it's going to be a very important piece, and it's probably one of the most expensive mistakes that you can make as an S corporation.
Okay.
So
payroll, do it.
Yes, I know. So the next one is, we call it co-mingling.
Oh, yeah. That's a fun one. Yeah.
So co-mingling is when you are mixing your business and your personal stuff together. So, I mean, like I said, when you're a single member LLC, maybe it's not that big of a deal, or if you're a sole proprietor, really a sole proprietor, they don't have a business set up. So, maybe you're doing it out of your personal account. But especially once you have a business structure, it's really, really important that you keep your personal expenses away from your business expenses. And one of the really good examples I do is especially with your meals. Yeah. So if you use the same credit card for taking clients out to eat as you do going out to eat with your family and going out to eat with your friends, it's very likely that the IRS will just say, you know what, we're already overworked. I don't want to deal with this. So I'm just going to get rid of all of them. Gotcha. Or like they'll say, okay, all of the Amazon purchases, give me the receipts for 5 of these. And then they'll look at those 5 receipts. And if any of them have anything that's personal, they'll get rid of all of them from Amazon because they don't have time to look through 100 Amazon receipts to make sure that you actually, when you were making your Amazon purchases, that you made sure that they only had business stuff and you didn't like sneak some shampoo in there or something, So that's like one of the really big things is we want to make sure that your account is always as audit proof as possible.
Okay.
And so keeping everything really super separated and being very rigid about that gives you that level of credibility. Yeah. Because then the auditor can say, okay, you've done this correctly. And this is your process. I have seen it in action and it's provable that you're doing it properly. So we'll just move forward.
Okay.
Versus if you say, okay, this is my process, but then they find like all of these examples.
Where it's like personal. Yeah.
Right. Nope, then they'll say, you know what? I don't have time for this. Let's just get rid of it all.
So what about things like Venmo, like quickly paying someone with Venmo? And if you put in the description, if something is personal or if it's for business, like, is it still there? Is it kind of still in all the same realm of like, if they pull 5 and some of them are personal? Yeah.
I mean, some of it is about making sure that everything is classified properly.
Okay.
It is okay for some of your business accounts, for some of your personal accounts to have business expenses in them. And that's where the accountable plan comes into play. So an accountable plan is just like an employee reimbursement form where you say, like, this is the date of the purchase. This is who I purchased it from. Here's a description and here's a receipt. So just like what you would submit to any other employer for reimbursement, you're going to do the same exact thing to yourself. Because they understand, okay, maybe you have a Chase card, and that's your business credit card. But for whatever reason, your Capital One card has like these crazy points. So you decided to book one of your flights on that card. So the IRS knows, like, as a business owner, you need to make the best decision to increase the profit of the company. So making sure that you're getting all of these discounts and credit card points and stuff, it does make sense. But you have to follow the reimbursement process and the documentation process correctly in order to do that. So it's just about making sure that you have the company adopt an accountable plan and then that you're going through the process of making sure that you're reimbursing yourself for those items. And then also, if sometimes personal stuff gets mixed in with your business, you accidentally use the wrong card, what have you. Again, that happens in the regular business world, but it's just making sure that it is classified as a personal expense. So it's away from all of your business expenses. And then also that it's not something that you do all the time. So I normally say your business accounts should be like 95% of the time, they should be for business purposes. So if there is a couple that leak through, okay, that's perfectly fine. But if it's, again, the IRS is looking for intent.
Yeah, that's fair.
So if you're using it primarily as a business card, then they're going to assume that it's a business card. But if you're mixing it up, then they're going to say, okay, that's personal.
Yeah.
And we're just going to move forward as if it's a personal card, because you're not using it with the intent for it to solely be used for business purposes, because you're also adding in all of these living expenses. So
I got you. Yeah, that makes sense.
At the end of the day, I say it's better, it is an extra transfer, but if you're going to buy groceries and clothing and stuff like that, make sure that you are transferring money from the business account into your personal account or putting that on a completely separate credit card. That way your living expenses aren't getting mixed in with that business side.
That makes sense. Okay. So intent, but also really trying to separate as much as possible. Okay.
So, and then the other one, it's when you have more than one person that owns the S corporation.
Oh, okay.
So it's keeping in mind that an S corporation, it can only have one classification of stock. So that means that everybody has to be treated exactly the same. You can't have a system where one shareholder gets paid before everybody else, because then that creates a second tier of stock, which would invalidate the S election. So what we want to make sure is that each owner is paid the reasonable compensation for the services that they actually provide.
Okay.
So because it's not impossible for someone to be a silent investor in your S corporation. So if they're not performing any services, they shouldn't be getting any payroll because they're not working for you.
Yeah.
But at the same time, you also need to make sure that the distributions are equal compared to their percentage ownership.
Okay.
So that's really where it's going to come into play a lot more, is making sure that distributions on a percentage level are equal across all of the partners or shareholders, or at least that every shareholder has the ability to call the same amount. Gotcha. So if one shareholder takes 50-50 shareholders, one takes 75,000 and the other decides not to, that can be okay, but you can't tell the other person you cannot take this 75,000.
Okay.
That 75,000 has to be available for them to take
I got
if they want to.
Okay.
So it's just making sure that the shareholders are all treated exactly the same, especially when you have multiple owners. And that's why I say sometimes it's easier for that central business to be a partnership. And then that gives you more
flexibility.
Right.
Okay.
More flexibility, especially when you have, one person gets a certain percentage, each person gets a certain percentage for the number of accounts they close or the number of accounts they manage. Mm-hmm. That's a lot easier to do when you're in a partnership structure than when you're in an S corporation. And really, in the S corporation, the only way to do a lot of that is through payroll, which some people want to avoid because it costs you an extra 15% to do. Just kind of keeping in mind that if you are in a situation like that, it is cheaper to pay the extra 15% to run it through payroll than it is to potentially negate your entire S election by treating the two shareholders differently.
I mean, that's fair. So like both partners have to have the ability to take something if one is taking something. It's
right.
Okay.
Mm-hmm, mm-hmm. Yeah, okay. Each shareholder should.
Okay.
So it is a little bit complicated, all of these different issues.
Just a smidge. Yeah.
And that's why I say it is kind of like a little baby. There are some finer details that the IRS is going to be very, very picky about. Mm-hmm. So you need to make sure that you are constantly aware of them. But it also doesn't negate the fact that an S corporation could be the best strategy for you.
Yeah.
It's just
done right.
Right.
Yeah.
Right. And that's a big reason why I like to wait to elect an S, an S status until I know that it makes sense financially to take on all of these extra responsibilities.
Yeah.
Even if it's just the extra headspace to remember all of these things and to be thinking about payroll all throughout the year. And, has my industry changed and somehow the, wages have skyrocketed. So I need to be ahead of that and all of these things. Does it actually make sense to do that? And show me how much money I can save. Because that's what it is. Bottom line, show me the money and then maybe I'll do a little bit extra.
Yeah.
So they say before you rush in to an S corporation, make sure that you're really aware of some of these issues that can kind of pop up and all the additional paperwork that are associated with them. So,
that's fair.
I mean, I think with these items, make sure you actually are an S corporation.
Yeah.
Run payroll. Keep your business and your personal expenses separate. Mm-hmm. And then also make sure that you're treating all of the shareholders the same.
Okay. Mm-hmm.
Those are going to be the big
They seem
ones.
Relatively simple, but I can see how this could be really complicated. Well, you don't know what you don't know as well. So there is that too.
Exactly.
Yeah.
And I say you're running a business at the same time.
Yeah.
So,
and it's a lot of juggling for sure. Yeah.
Yep. Mm-hmm. So if you have any more questions about an S corporation or you want to know if you even are an S corporation,
we can help.
Right. Put a comment below, send us an email. We would love to talk more with you.
Thanks, guys. Bye.
That's a wrap on Let's Get Fiscal. Ready to stop guessing and start saving? Click the link in the show notes, grab your consult, and let's make your business work for you, not the other way around. You've got this.